Okay, so welcome to our webinar, everyone. So first, start off with our administrative stuff. The extra credit for the midterm exam correction was due Sunday, so I am working on grading those and getting those back to you. And then keep in mind that the extra credit paper over GAP and IFRS is due this coming Sunday at 11:59 p.m. So again, worth 50 points. Um, so make sure that you take advantage of that opportunity. It will really help you. You should be starting to take a look at the remaining modules and the final. So you will want to start preparing for that and just kind of keeping in mind, the things that you want to be looking at with these problems. One of the things that I always tell my students, especially on the final, is to make sure you review your homework answer key. Okay. The homework answer key can be really helpful because it will tell you the correct way to do those problems and will be kind of a guide because a lot of the problems that are on the final are very similar to the homework problems. Okay. They're not exactly the same. You do have to put some thought into them, but it's just a good study habit to review your homework answer keys, review your homework, make sure you understand what you did wrong. And of course, also make sure you understand the answers to the quiz questions and things like that. Okay? Any questions about that so far? Any administrative questions? Okay. I'm going to share my screen. All right. So we had one question that somebody asked about problem 9-3A. Okay. And so basically depreciation methods are pretty straightforward. They're not really as complicated as what they may sound in the book. They're pretty straightforward actually. So straight line depreciation is literally just the calculation of, and let me pull up the numbers here for our problem. Give me just a moment. And forgive my slow internet. I'm actually traveling this weekend on hotel Wi-Fi, which is somewhat challenging. So, okay. Let's get to problem 9-3. Hello? Okay. Hi, Christopher. Okay. All right, so problem 9-3A, let's take a look at it real quick. It's asking you basically, oh, what just happened? There it is. Okay. So 9-3A is asking you to calculate the depreciation costs via straight line, double declining, and units of production. Okay, and they give you the numbers that you need for those. So to calculate that depreciation cost, you've got a machine cost of $80,000, estimated useful life of 4 years. Okay, and after which it could be sold for $5,000. All right. So to calculate straight line is very straightforward. Okay. They they basically, sorry, got distracted for a second. Um, they they give you this cost of $80,000, and you have to subtract out basically what it could be sold for. So it's going to be 80,000 minus the 5,000, and then you always want to look for how much useful life it has. Okay, and in this case, they tell us 4 years. Okay, so when you do that, it's 80,000 minus the 5,000 divided by 4 years, and that's going to give you your annual depreciation cost. Okay, so when you're breaking it out annually, just divide it by the number of years you have. Does that make sense? Okay. All right, straight line's the easy one, right? So double declining balance, okay? Double declining balance is a little bit different than straight line, okay? So you're going to basically do twice the straight line rate by definition, okay, with double declining balance, okay? So you take 100% divided by 4 times 2 because you're doubling it, right? So 100% divided by 4, 4 years of useful life, okay, and then you're multiplying it by 2, okay? So each year, you can see here, you schedule out each year 1, 2, 3, and 4, okay? And then you take the book value, which is $80,000, okay, times the, yes, it will always be 100%. Good question. Yep. So 80, you'll take the $80,000 and you'll multiply it by that rate of 50%. Okay. Then once you get that, you take the 80,000 minus or times the 40, which is what this is right here. Okay. And you get and multiply it by 50%, you get your next year's. So you just keep carrying it down each year until you get all of your numbers for all 4 years. Does that make sense? Any questions on double declining? Yes. The last year is always going to be the final number. Yes. Okay. Yeah, you don't add them together. Sorry. Okay. All right. Then the last method that it asks you about is units of production. Okay. So the formula for that is going to be cost minus the salvage value divided by the total production equals your depreciation per unit of production. Okay. So 80,000 is our cost. Our salvage value was 5. We knew that. And they gave us that this was 1,000,000 units, right? So that means that depreciation per unit of production is going to be 7.5 cents. Okay. You follow me so far? Okay. All right. Then you have to take each year's annual production, which in the problem, it gave us those years of annual production in C. Okay. So in the first year, you had 200,000, then you had 350, then 260, and then 190. Okay. So those are our units of production. So you just basically take that cost per unit and multiply it by that unit of production. Okay, and that gives you your depreciation expense for each year. One thing you do want to make sure of is that you do total out your 1,000,000 units of production. Okay, so you may or may not get, all of the information you need in a problem. You may have to work your way backwards. Like they may give you the first, third, and fourth year, okay, and tell you that the total is 1,000,000. So you have to figure out what year 2 is, right? So just keep that in mind. Some of these problems like to do that. They like to make you work things backwards, okay? Or work your way back into them, okay? Questions about the units of production? Right. No, you're literally taking, Christopher, you're literally taking the cost per unit and multiplying it by however many units of production you had, and that's your depreciation expense. You don't have to subtract anything. Okay. All right. Any other questions about that problem? Okay. All right. What else? Try not to read too much into the problems. They're actually really straightforward. Did you guys watch the webinar already? Okay, because I went over a lot of these, so I'm just wondering, what specifically is your question about P9-3B? Okay. What don't you understand about the problems? What's confusing you? 2012 to 2018 is not relevant to the question. Okay. Well, really it is somewhat relevant, yes. Um, because that, yeah, you you want to use 2012 to 2018. It tells you how many years it was, useful, right? So that's your useful life. So you've got six years there, right? Yeah. It really, that's why I caution you guys not to think too hard into these problems. It really is very straightforward. Don't make it more difficult. Okay? So the reason that they give you the 2012 to 2000, it's actually 2017, um, is because, they want you to find that useful life. Okay? And then it's literally the same calculation that you did in the previous problem. You're just finding that useful life. But you do it literally the same way as what you did the previous problem. Do you have other questions? Okay, yeah, okay, you're trying to add them together. You can add the all of the dollar amounts together. So like each year, the 2012, 2013, 2014, all of those, you can add those together, but if you were doing something else, I would say probably don't. So especially on the double declining balance, so you know how you in this first problem that we went over, yes, you can add your total depreciation together over the course of 4 years. That's not an issue, but don't try adding or subtracting anything out, right? Actually, so in the second one, it's a little bit different. I'm looking at this problem now. Hang on. Nine 3B. Yeah, this one's just a little bit different. Okay. Right. 2000, and that's a very good call out, Tabitha. 2012 is not a complete year. So that's another very, very good call out. Give me just a minute. Okay. Sorry, guys. I'm on one screen tonight, so making it a little more difficult. Okay. Okay. All right. So here's how you set up P-3B. Okay. So you've got your total cost, right, minus your salvage value, right, divided by the number of years. That's giving you your straight line method, okay? So that one, again, pretty straightforward. Your double declining balance, in this case, you are going to subtract out, based on the problem that they gave you, you're going to subtract out whatever this previous year was. So 2012 is going to come in and go right here. 2013 right here, 2014 right here, 15 here, right? And then 2017 is just going to be whatever the remaining balance is, okay? So there should only be a partial balance at that point that's necessary to leave a salvage value of 23,400. Okay? Make sense? What are you confused by? Take a look at the problem. Okay? Take a look at what it's asking you. All right? Asking you to calculate each year. Because in the partial year being 2012, not 2017, no. The final year is always the year that you have, that amount remaining. You would actually calculate for 2012 because basically you're looking at, whatever you have. You purchased that in 2012, so you're allowed to calculate it, for that year, full year. And your remaining part comes in 2017. Okay. Oh, you understand Part A? Okay. Okay, so what part don't you understand? Which doesn't have It's Part B, which doesn't have units of production. And it is 2018. Okay. So you're talking about the second part to this problem, right? Okay. So the second part to the problem, yes, you're right. So Part A is the way that you would typically calculate it, right? So Part B is a little bit different. Part B is asking you to assume that the machine was purchased at September 1st, right? So that's the part. The first part is saying, it doesn't matter when you purchased it. It didn't give you that number. The second one is talking about purchasing it on September 1st, 2012. In that case, you do have a partial year. Okay. So you have to count the number of months that accounts for. So you're talking the entire month of September, the entire month of October, November, and December. So that's 4 months, 4 full months. Okay. So you have to, at that point, do the calculation to show basically 4/12 of the year for which you can calculate. Does that make sense? Okay. And 2018 is also a partial year, is it not? Did they also put that in there? That's right, it is a full year. Okay. Got it. So that one's a full year. So yes, Tabitha, you are exactly right. You would use September 1st for the full 4/12 calculation for that first year. Make sense? Okay. Sorry, I thought you were talking about A. I was still back up on A. Okay. Any other questions? Okay, you guys good? All right, guys. Thank you for hopping on tonight. And please, please, please let me know if you have any other questions that come up and you need anything, okay? I will do my best to get back to you. Just please make sure that you're not asking them at 10 o'clock on Thursday night, the night the homework is due, okay? We want to make sure that, you're being proactive, getting this stuff done and turning it in on time, okay? All right. Keep up the great work, and just keep plugging along. We're almost there. We're in week 6. We've only got 2 weeks left. Kind of exciting. So congrats. Keep pushing forward, and just make sure you're doing everything you need to do, reviewing your answer keys, understanding what you did wrong or what you did right, understanding the quiz questions as well, and you should be fully prepped for the final. Okay? All right, guys. Okay, perfect, Christopher. Just let me know specifically what questions you have. I need to know what you don't understand about the problem. Okay? Alrighty. Alright, have a great week, y'all. And I will talk to you very soon. Thank you. Have a good night.